Hi, I'm Dean George. Congratulations on having taken the first step towards securing your own financial future with a reverse mortgage. A growing number of Americans are turning to reverse mortgages to help them keep their homes and supplement their retirement income. It's a simple solution, really. A reverse mortgage unlocks your home's equity, freeing up your assets to spend however you'd like. And like you, I thought it sounded like a great deal, but I had questions about this U.S. government-backed program, and I wanted to make sure it was the right choice for me. Over the next few minutes, I'll share with you what I've learned, so you can make a smart choice about whether a reverse mortgage is the financial solution you're seeking. It used to be that there were only two ways for folks to get cash out of their home's equity. They could sell their home and move to cheaper housing, or they could borrow against their homes, leaving them with yet another loan to pay each month. Reverse mortgages have been available since the late 1980s, but they are just now catching on as the word spreads that you can get money from your home without having to move into smaller housing or create additional loan payments. With a reverse mortgage, you can take advantage of all the equity you've built up in your home after years of diligent payments, receiving tax-free money while you stay in the home you're comfortable in. And the best part? This is a loan that you don't have to pay back. In order to qualify for a reverse mortgage, you must be at least 62 years old with some equity built up in your home. Almost all single-family residences are eligible, as are most condominiums, planned unit developments, and manufactured homes located on your own land. There are absolutely no health, credit, or income qualifications involved. The only requirement is that your home must be at least 1 year old, and it must be your primary residence. There's a good reason why the number of reverse mortgages has doubled in each of the last 3 years. Many seniors, including myself, never saved as much money for their retirement as they would have liked. Some that did save enough were hurt by recent stock market losses and paltry savings account interest rates. Other folks that use reverse mortgages just want to finally retire and still have money to live comfortably. Perhaps you want to keep your home, but still reap the benefits of the exploding real estate market and low interest rates. Or maybe you can't qualify for a traditional loan, or you just want a substantial emergency fund to prepare yourself against an uncertain future. Whatever your reasons for wanting to free up the money that's locked away in your house, a reverse mortgage provides an excellent option for folks who would rather stay in the comfort of their existing homes rather than downsize into a less expensive home, or worse yet, move in with relatives. Imagine what you could do with all the tax-free income you'll receive with a reverse mortgage. You can pay off old debts, remodel or make repairs to your home, buy a new car, help grandchildren with college tuition, or go on the vacations you've always dreamed of. You could pay for prescription drugs or unexpected hospital bills, even reduce the impact of estate taxes for your family. What would you do with the extra money? If you're wondering how a reputable reverse mortgage company can afford to send you tax-free money every month, the answer is simple. The cash payments you receive, plus interest and any fees from the initial transaction, will be paid back when the last surviving borrower either passes away, sells the home, or permanently moves out of the home. Repayment is usually made using the equity in your home, leaving any remaining funds behind for your heirs to inherit. If you suspect you may want to move one day, but still keep your old house, you can also choose to simply make payments like you would with any other loan. I was pleased to learn that the federal government guarantees that most reverse mortgage loans will never exceed the value of your house, regardless of how long you live or how high interest rates rise. You and your heirs will always receive the home's remaining equity after the loan is repaid. So I get to stay in my house, live comfortably, and my family will inherit the rising value. There are actually several factors which determine the amount of money you're eligible to receive, such as how old you are, how much equity you have in your home, the appraised value of your home, the type of reverse mortgage you choose, closing costs in your area, and current interest rates. Generally, the older you are, the lower the interest rate and the higher the value of your home, the more money you can expect to receive. You can also choose to receive your money in monthly payments, a large lump sum, a line of credit, or any combination of all three. To give you flexibility, there are actually several different types of reverse mortgages. Which type you choose will determine not only the total amount of your loan, but also the cost involved and how you're able to spend the money you receive. Your reverse mortgage specialist understands all the advantages and possible disadvantages of each and will help you make a smart choice based on your particular situation. Before getting a reverse mortgage, you will have the opportunity to meet face-to-face with an independent reverse mortgage counselor free of charge. Your counselor will answer any specific questions you have, inform you of any alternatives, and help you decide which reverse mortgage would be a best fit for your needs. The total cost of a reverse mortgage are similar to a traditional mortgage and include items like interest charges, origination fees, closing costs, and insurance. Most folks choose to simply add these costs to the loan balance so they don't have to pay anything out of pocket. Remember, with a reverse mortgage, you still own your home. The title is still in your name, so you must continue to pay for your property taxes and homeowner's insurance, as well as make any necessary repairs to your home. Some qualifying reverse mortgage candidates are concerned about leaving a large inheritance to their heirs. That is, until they actually speak with their heirs. When I asked my kids about leaving a legacy, their main concern was seeing me enjoy life now. And as my daughter says, she'd rather see me on my fishing boat with my grandson than struggling just so I could leave something behind. And keep in mind also that your heirs can still receive the remaining equity of your home after the loan is repaid. Also, consider that payments from a reverse mortgage can actually grant you the freedom to help your children, grandchildren, and loved ones right now. Again, talk to an estate planner about inheritance taxes and the benefits of a reverse mortgage. And finally, even after you close your reverse mortgage, you still have time to reconsider your decision. Should you decide for any reason that you no longer want the loan, you have 3 days to cancel completely. Now, you may find, like I did, that a reverse mortgage gives you the financial freedom to enjoy the comfortable retirement you deserve. You owe it to yourself, your loved ones, and your future to learn more. Go ahead and make the call.